Good afternoon to you and welcome to ASEAN Business Report. Today is Tuesday, the 27th of September 2011. You are with me, Ong Anand Amatayakun.
And I'm Rina Jongprasit.
Yes, Kun Rina, today is a big focus on the stock market, especially in Asia, as there's a recent sell-off on the stocks that has slumped the market in big red.
And this sell-off we've also seen yesterday in the stock exchange of Thailand as well.
That's right.
In a relating news, capital market organizations proposed the establishment of a fund yesterday to support the stock market in the absence of collective action to end the Eurozone crisis, which threatens to induce further plunges in global bourses. The stock exchange of Thailand yesterday lost as much as 9.42%, which triggered a technical trading halt. In its 36-year history, the exchange's circuit breaker has been thrown only twice before, in 2001 after the terrorist attack in the United States and in 2006 after the launch of capital controls. At yesterday's close, the SET index had rebounded to 904.06 points, for a narrower loss of 54.10 points or 5.65%. Summing 3 days of losses, a plunge of 11.1% wiped 1.02 trillion baht off the market's capitalization, bringing it down to 7.4 trillion baht. After yesterday's panic selling of Thai stocks, the Federation of Thai Capital Market Organizations, or FEDCO, proposed the establishment of a jenwipakul fund worth about 100 billion baht and a review of the government's populist measures. Establishing a jenwipakul Fund 3 will help to develop the capital market in the long term, said FEDCO President Phaiboon Nalintarangkoon. The government will earn money through its reduction of holdings in state enterprises, while investors will be able to buy stocks at bargain prices. According to Securities Analysts Association Secretary General Sombat Narawuttichai, 170 Thai stocks are now trading below their fundamentals. The association is now in the process of revising its end-of-year SET index forecast, given that Eurozone factors have become worse over the past 2 months. FEDCO's proposal for the establishment of a support fund was flatly rejected by Deputy Prime Minister Kittirat Naranong, a former president of the Stock Exchange of Thailand. SET President Jarampon Chotikasathian said after discussions with brokerage houses that yesterday's market fall made the Thai bourses loss equal to those in Indonesia and the Philippines. In the past 5 days, Indonesia and the Philippines have lost 11.6% and 13.6% of market value, respectively. Foreigners remained net sellers yesterday as they left emerging markets and returned to dollar assets. So far this month, the net sales has exceeded 18 billion baht. The baht also plunged below 31 to the US dollar yesterday to 31.17, the weakest level since January 31st. Gold shed more than $100 per ounce to 1,532.72 US dollars.
Well, we've seen more than 10% down in Asian markets mostly, so we are going to discuss that with a lot of experts today, starting off with the SCB Securities Head of Research Group, Kun Ketisak Jenwipakul, on the line with us right now. สวัสดีครับ
สวัสดีค่ะ
Kun Ketisak, the Asian equity market took a real bloodbath yesterday, but it has rebounded slightly this morning, so can you explore the sentiment?
Well, I think in the short term, the Asian markets, particularly Thailand, which fell the most yesterday, will probably see support, at least in the form of a technical rebound. And this is largely due to the velocity and magnitude of recent declines. But sentiment, we think, is still fairly fragile, and we're still in a period where volatility is likely to remain exceptionally high. In other words, what happens in the U.S. or Europe overnight is still likely to impact the Asian market. So to break away from this situation, situation. I think the market needs some sort of clarity. They need to see a bit more concrete plan from, especially from Europe, on how they tackle the debt crisis. Well, time will tell whether these plans will work, but at the moment we're in a pretty extreme situation where it's largely a confidence issue.
Kun Kitisak, what do you think the sell-offs over the past days were they justified, since the growth in the Asian economy is quite strong, or does the problem has more to do with the European debt crisis?
It's definitely primarily due to the European debt crisis, but just bearing in mind that there are some fundamental impact in the context of a potential recession in Europe that will lead to belt tightening or demand destruction on a global context. Now, but I think the magnitude and velocity of the recent sell-off has a lot more to do with sentiment and panic mode of investors rather than deterioration of the fundamentals. So, in other words, the economic slowdown would definitely impact Asia in terms of income, because Asia's net exporter, but I really doubt that is the magnitude that the market is reflecting, because end of the day, the Asian consumption story is still fairly intact. And on the flip side, if we look forward the next few years, the Asian market is still probably going to be the best market to be in terms of growth.
Okay, so are you saying that this is going to be short-term, and will the Asian markets recover by the last quarter of this year?
Well, we definitely think there's scope for recovery towards the fourth quarter. Actually, going back to a third quarter strategy report that we put out, we highlighted there's some downside risk. Now, we admit that the extent in which the market has declined is a lot worse than what we had expected. But in our recent fourth quarter strategy report, we've been arguing that we're starting to see some risk-reward trade that's looking fairly attractive. So if we were to not be overly short-term and look on, say, a 3-month perspective towards the end of the year, we think the risk is actually towards the upside, simply because of the magnitude which the market has declined. And the factors which could turn sentiment around are externally any measures that can stabilize in the Europe, and domestically is signals of an end to the rate hikes, clarity on the corporate tax cuts, which will boost earnings, as well as the seasonal fund inflows from the LTF.
From your perspective, speaking about Thailand, do you think Thailand is still an attractive buy?
No, we think so. The sovereign debt crisis doesn't apply to Thailand. If you look at the fiscal debt to GDP is still fairly low at below 50%. Domestic demand is still fairly strong, and most importantly, if you look in terms of valuations, we're trading on 10 times earnings this year and 9 times next year's. Now, that is attractive both versus history, which averages around 12, as well as relative to other Asian markets, which at the moment, against this year's earnings, trading about 11 to 12, and next year is going from about 10 to 11. So we still are trading at a 10 to 15% discount.
Well, thank you very much, Kun Kitisak, for joining us in Business Report.
Thank you.
สวัสดีครับ
On the line with us, we have also Kun Manu Baskaran.
Well, actually, the team has told us that he is not ready on the line, so how about we skip to the next news and we'll come back with Kun Manu. The biggest drop in Thailand's main stock index since 2008 has prompted brokerage, fund managers and the stock market to call on Prime Minister Yingluck Shinawat's 2-month-old government to alter plans to raise the minimum wage. The Federation of Thai Capital Market Organizations, a 6-member grouping that includes the Stock Exchange of Thailand and Association of Investment Management Companies, urged policymakers to review any measures that would hurt exporters. The SET index fell most among the Asian benchmark gauges yesterday, declining 5.7%, the biggest drop since October 27, 2008. The sell-off might bring some more common sense into the equation, said Terry Weir, Chief Financial Officer of Hana Microelectronics PCL, Thailand's biggest publicly traded semiconductor packager, which fell 6.1%. Terry said if the minimum wage goes up far quicker than the productivity increase, then that will leave a negative impact on profits and on competitiveness. Concerned that Europe's debt crisis and a weakening U.S. recovery will slow exports, which account for about 60% of the economy, have contributed to a sell-off in Thailand's equities and currency this month. Government plans to boost the minimum wage and purchase rise at guaranteed prices and have added to investors' uncertainty, said Kongkiat Opatwongkan, the Chief Executive Officer of Asia Plus Securities. The government should reserve some ammunition for some hard times going forward, said Kongkiat, who heads Thailand's third biggest brokerage. They have been spending and spending, and he is afraid that the government probably never realized how long the global slowdown is going to last. With the global economic slowdown, Thai exports will be affected, the Federation of Thai Market Organizations said in a statement yesterday. It would like to urge the government to review any policies that will affect production costs. That includes attempts to raise minimum wage. The hike in wages during the economic slowdown may accelerate layoffs by manufacturers.